It's all about Eurozone GDP numbers. Second quarter, year on year, we saw 1.7%, and markets had expected growth of only 1.4%, so really beating expectations there. But I think one of the key numbers to focus on is the fact that Germany grew by 2.2% quarter on quarter. So fantastic growth coming through from Germany, and this, I suppose, is going to start boosting markets because they came in better than expected.
Eleni, that's correct, and that's why we saw this this nice bounce this morning, and it was really an opportunity for some investors after some stocks have been hit hard for the last 2 days to really take profit, and that's the expectation, or that's what we're really seeing this morning. Volumes are very low in the JSE, we're just over 3 billion, and also just investors waiting for this afternoon's date in terms of CPI and University of Michigan. So we're seeing volumes fairly low, profit taking this morning, and obviously we just saw a bit of overflow from Standard Bank's results. We see them coming off a little bit this morning.
Well, you mentioned we've got relatively low volumes when it comes to the South African bourse at this point in time. It seems that investors are waiting to see what's going to happen in the US later on today. But just quickly focusing on that European Union GDP number, we are starting to see a lot of growth coming through in various economies, apart from Greece, where we saw the economy contracting by 1.5% quarter on quarter, 3.5% year on year. So still a lot of negativity coming through. But I think one of the most important things to take note of is the fact that the weaker euro has boosted exports out of the Eurozone.
Yes, Eleni, and we have seen the Eurozone has put a lot of measures in place. They've cut back spending. They are looking to bring down their deficits, lowering salaries, moving retirement ages out. So they really are striving to get the growth back within that region, and it's very positive for them as well as for South Africa, because they are one of our biggest trading partners, and that's possibly why we've seen such a nice strong rand. It's really maintaining at 722, 723 this morning, and it's very positive for us in terms of our exports. So very positive for the global economy going forward.
Looking at the CPI numbers set to be released in the US, the previous reading showed a slight deflation, down 0.1%. Investors are forecasting a slight number of 0.2%, of course, in the positive. Let's look at the deflation versus the inflation scenario that is playing out in the US, because on one end, you've got a lot of stimulus, you've got a lot of quantitative easing, which should in turn lead to inflation down the line. It hasn't filtered through as yet. What are we expecting to see at this point in time? Because neither deflation is going to be deflation obviously is not a good thing, but neither is inflation. So obviously we have to find a balance.
Yes, Eleni, at the moment, one speculates that the Fed wants inflation. They want the consumer to come back, and they're very conservative in terms of their in terms of inflation. Deflation is obviously very negative. Consumers are not spending, no growth, so they definitely want inflation, and they're willing to take the risk on inflation. They're willing to throw as much money at the problem and to risk inflation to see growth return to the United States. And in terms, in terms of overflow for the rest of the global economy, so those numbers are going to be very pivotal. We saw that in terms of volumes traded looking for direction, but also in the light of, we've seen the jobs numbers that have come out quite negatively in the last week, and if we are going to see a bit of momentum and possibly a turnaround, we've just dipped negatively, and see us move positive for the rest of the afternoon. Those numbers need to be very positive there.
Just looking at the unemployment scenario that is playing out in the Eurozone, we're sitting at unemployment at around 10%, a 12-year high. This is despite the fact that we see, more positivity coming through on the GDP front. So if we do start seeing some of these economies growing, perhaps we'll see the jobs market growing as well. You mentioned the US employment scenario, weekly jobless claims rising 2,000 to 484,000 for last week, and it's the highest point since February this year. Economists had expected claims to fall around 14,000. So this just really feeding through into the scenario that perhaps stimulus is the way to go when it comes to the US.
I think, Eleni, in terms, and we saw the Fed coming out being very conservative in terms of how much money they're going to be throwing at the stimulus, in terms of the stimulus package. And unemployment is very cyclical. And, you know, in terms of growth, they had expected to see perhaps more stable growth going forward into the next 6 months, and we've seen that not quite happening. And if we continue to see those numbers coming off, I think, you know, the Fed might have to re-look at the stimulus plan and maybe consider more stimulus there. But we are seeing blimps, and we saw with the corporate earnings recently, and as that season comes to an end, we did see a lot of corporate hirings coming through, boosting those numbers. So I think it's going to be important, as we see on the corporate side, are we going to see those jobs being maintained in that sector, or are we going to see a lot of jobs coming off? Because the corporate sector really seems to be holding up the economy in the States. And hopefully if we see CPI coming out and we see continuing numbers kind of backing up the consumer, that they are going to be coming back in the next 6 months to the next year, we'll see some growth in those numbers.